right? And even though we all now have a clearer picture of where that labor market stands, you can tell by the way the market's trading today that it too really doesn't know what to do. It's not sure where it should be, right? Yeah, labor is weakening, that's for sure, and we saw that in the numbers. But the Fed's next meeting is the 17th, which is after some key inflation numbers we're going to get next week with CPI and PPI. So don't forget, we had that private payrolls number, that's ADP, they're the people that actually write the checks, and it too surprised us to the downside. So most of that stuff's coming in line. We also saw the number of unemployed people surpass job openings for the first time since 2021. So what does it all mean, right? I've brought in an expert to help us all sort it out. Please welcome to the show, Mr. David Stryzewski. Thanks for being on the show, David. Really appreciate your content coming to us from Kirkland, Washington. All right, brother, kind of give us a little bit of a recap. I mean, we had some data all week long. It looks as though that the labor market's kind of falling apart on us a little bit. Are we worried about inflation? Is the Fed going to put themselves in a pickle? A lot of questions, no answers. Maybe you've got them.
Well, we're definitely seeing numbers come in right now in a negative way. And this is the first time since really the beginning of the pandemic that we've seen, negative employment numbers. Now, one of my thesis ideas on the reason why is that, these employment numbers are reflective of part-time jobs and full-time jobs. And so as an example, if you deport somebody and they had 2 part-time jobs, well, that looks like a -2, even though that's a -1 person from the labor force. And what if they had 3 jobs? And so, I'm not really believing all the data, these headline numbers, as you and I have talked about, like even CPI that's going to be coming out next week doesn't really affect the average person. It's not their actual expenses.
CPI, so, I like that.
But, I'm looking at this and saying, I think that the BLS numbers, this is a terrible time for them to be having like a hiccup in the numbers because, of course, Powell being data dependent next week is going to need some real numbers. I think he's definitely going to be cutting 25 basis points, as you and I have discussed. I think he needs to come down on those pretty significantly, just like other nations, first world nations have as well. But that just ultimately comes down to the average consumer just not doing as well. There's not as many jobs available today as there are even people looking for jobs. And so that also flipped, as you mentioned. And it's just a very, very, very weird time with everything sort of in motion and nothing solidified.
And now we're to that point where I think I talked about it 2 or 3 years ago when the employee had all the power. I want to work from home. I want to do this. I want to do that. I'm switching jobs. And now the employee's got basically zero leverage. They don't have any power. Everybody's back in the office and doing what they need to do to make sure that they don't lose their job. There's no such thing. We've lost this term job hopping, and now they call it job hugging, and for good reasons. So that's where we're at. Now, I think the data today, as weak as it was with the ADP data that we had yesterday, I hope, and hope's not a great business plan, but I would like to see the Fed cut by 25, maybe multiple times, rather than come out of the box with a big half percent cut. What do you think?
Yeah, no, I think that you have to start moving this in the right direction. But let's just be clear, Scott, a 25 basis point cut hardly affects that real number. And then also we're seeing, the long end of treasuries and also every G7 nation, hitting record highs right now. And so the bond market tends to be more intelligent than the stock market. And that tells us that we're heading towards a higher inflationary environment. And so, I think that if you cut the rates, well, guess what? The stock market goes up. That means higher inflation. It means it costs more to get those same positions. And so that kind of makes sense. I think that we're heading for a higher inflationary environment. Again, some of this data that's coming out over the next month or two could cause a lot of confusions in market cycles. I mean, one statistic that's not even being brought up right now, Scott, is that, the Chapter 11 filings this year, as of July, 78% higher than last year. I mean, that is a big number, 78% higher bankruptcies taking place amongst corporations. And so there's a lot of companies today that are having a harder time with liquidity, having a more difficult time, essentially with these mortgages and these loans. We've got $9.7 trillion that had to be refied here in July to July 2026. And that is the biggest refi cycle that we've ever seen. So we've got to start dropping these interest rates. So yeah, 25 makes sense, but they need to be able to do 75 like they, said that they were not going to do in the hiking cycle, and then they were able to jump in later on. They did 4 in a row, by the way.
So do we need?
Saying they didn't do it.
Yeah. Do we need to worry about the fact that we've got a slower labor market, but we do have M2 money supplies spiking through the roof? You said we've got some more inflationary pressures back there. Could the Fed find itself in a pickle? They can't really cut too much to help the labor market because they've got inflation lurking over their shoulder?
Well, I mean, yeah, you just nailed it right there. So they've got inflation. It's going up. It's a challenge. It's a challenge to average consumers in a very specific way. But if they cut, yes, things, will get pricier in the stock market, et cetera. If they don't cut, though, what we do is we risk 70% of our GDP being the consumer, having significant problems. Also, we need to think about this, too. Small business has been the backbone of our society. Those higher income earners that run small businesses, people that work hard, put in their time, they're having a harder time today keeping employees around. And so, it is just a real thing.
I agree.
To understand that change is amongst us.
Great song. All right, brother. Love the reference there. David Stryzewski, Kirkland, Washington. Thanks for being on the show. Can't wait to see you again next Friday. David, thanks for being on.